Portfolio Manager at eNCA Capital, Martin Smith, joins me now. Martin, as always, many thanks for your time. Let's start with those overall market movements. I mean, it was red across most of the board. Some of the catalysts you thought would have impacted on the movements. I know global peers were mixed or in the red because of those inflation fears that continue to weigh on sentiment.
Yeah, I'm just thinking to myself, where do I start? There's so many things at the moment. I feel like there's just a lot of uncertainty at this moment in time across global markets. You've got potential Chinese energy crisis, you've got Evergrande, you've got regulatory risks there, you've got inflation in the US. There just seems to be a lot on the go at this moment in time. And I think that's kind of caused elevated levels of uncertainty and a little bit of risk off at this moment in time. We've seen that flow through into our local markets. And I think the US market as well has been behaving very strangely. You'll see it futures going up and then all of a sudden it'll end down on the day. So it's just a lot of uncertainty. I don't think people really know what to do at this moment in time because there's a lot of news flow, and throw in the US debt ceiling issue there as well. I mean, there's just a lot on the go. And I think people just want to kind of see how things settle.
Right, let's speak about the local unit now. Earlier this week, it went above 15 Rand against the US dollar. I think a story there was a bit about the US dollar strength. It has managed to come back below that. But are there any other contributors apart from that dollar strength that we were seeing?
So, yeah, again, I think it's largely a function of risk off. And when risk off is kind of prevalent, you'll see emerging markets kind of be sold down. And as you know, the Rand is pretty much a good representation, the most liquid of the emerging markets. So it usually takes a lot of the pain. A key level was about that 15.20 level. So I was chatting to the head of our FX desk, and he was saying we keep bouncing off that 15.20 level the whole time. So if we break through that and we close above that, then it could be kind of 15.50 upwards. So luckily it's not. The Rand has strengthened a little bit in the last kind of few hours. We had 14.85, 14.90 right now. So let's see. It's, again, same as the market. There's just a lot of uncertainty. I don't think people really know exactly where to go, up or down.
Right. Let's speak about Nampak, which is actually going up based on the trading conditions that they reported to us today. Those have improved as the COVID-19 restrictions were eased in their South Africa operations and, of course, the rest of Africa. And so that's telling a story of improved group operating results.
Yeah, absolutely. And yeah, operationally, really good set of numbers, good volume growth, margins have done well. They've restructured that business nicely, so their costs have been kept relatively in line or have gone down slightly. So that's very, very positive. So again, operationally, a very well-run business. Something that is quite interesting, and probably one of the reasons for the kind of big movement we saw today, is the fact that they had an agreement with their creditors to lower their debt or reduce their debt by 1 billion by the 30th of September 2021, which is obviously yesterday. They've now had an agreement to push that out till the 30th of June next year. So that just gives them a little bit of wiggle room, and I think there was a massive overhang on the share. So once that news came out, along with the positive momentum that we've seen from an operational perspective, you saw the share bounce the way that it did.
Right. Finally, Martin, I mean, this is something that's gone over the heads of many. The world's second biggest economy, China, in the middle of a power crisis, while they're also dealing with concerns around Evergrande. But there are some analysts who've written some pieces during the course of the week saying China's power crisis could probably be worse globally. And I also think that's why we're seeing some or such volatility in the price of commodities because of what we're seeing happening in China.
You're absolutely spot on around your commodity point. And I think it's not just China. It's pretty much a kind of northern hemisphere thing. So basically, they've stockpiled less coal, given kind of environmental concerns and rhetoric around that. So as we're going into the winter, we're seeing that they don't have these stockpiles to kind of fall back on, all these reserves to fall back on. So now there's this issue of a lack of supply going into their winter. You also have issues out of China in terms of them not getting coal from Australia anymore, given kind of political tensions between the two. So there's a lot of moving parts. As that's happened, you've seen energy prices go through the roof in the last couple of weeks. But also, if those prices are going up, then the cost of manufacturing is also going up. So things like steel, to manufacturing steel is now also more expensive. So there's a lot of kind of effects thereof. So again, affecting commodity prices. also affecting sentiment. And I'm not surprised it's gone under the radar because, like I mentioned at the beginning of the show, there's a lot of things going on at this moment in time. Do I think this is structural? Do I agree maybe with that economist or person who spoke about it maybe being bigger than Evergrande? I'm not sure, because Evergrande is a leverage problem, which I think could absolutely spiral into a kind of leveraged kind of issue going out throughout the economy. But I think it's just a function of them having to work through this, having to try to fix the supply side of it, maybe upping the prices of energies in certain places. But I'm hoping that person is wrong and that this is just something that they can work through.